Welcome back, everyone, to another episode of Ready, Aim, Retire. I'm Rob Kirvan, your host, the show where we talk about your investment plan, your legacy plan, your income plan, and kind of everything in between. Anything retirement-centric, we're going to talk about it on the show. I'm joined here, as usual, with my brosif, Tony Shore from Minnesota. Tony, how are we doing today?
Oh, Rob. I mean, I couldn't be doing any better if I tried. I'm so good. Everything's great. I'm looking forward to spring. I think it's finally here.
I don't know. It snowed here the other day, but maybe it is
Yeah.
here.
Yeah, but that's it. That's it, right? No more snow, please.
Are you feeling like energetic? Because off air, I saw you chug a Coca-Cola, chased it with a coffee. Oh, there's the coffee there.
I've moved on to coffee now. Yeah.
Wow. Tony runs high tests.
It's the only way I can keep up with you, Rob.
That's true.
I have to be heavily caffeinated to keep up with Rob on these shows because, Rob, you're just whoosh. I mean,
we just go.
You know your stuff. You just go. And I've got to, I'm the old man here. I've got to keep up. So I've got to keep up. True. Thanks. No hesitation. Just,
very good point. Keep drinking the coffee. Keep up. We just need you to keep up.
How about you, Rob? What's been going on over there? I mean, I know it's tax season. You've probably been a little busier.
Pretty busy, but the biggest thing that's happened, we've talked about markets and stuff, but off market is my daughter Emma, that plays Division I golf for Nebraska Omaha, played her last tournament this week.
Oh,
so we were down there. My nose, you can't really see it, but I'm pretty windburned. But we're down there Monday, Tuesday watching. So that's it for that. So
wow,
it's kind of bittersweet.
You mean just for the season or for good? That's
good.
It.
She graduates this year.
Oh good. Yeah, she's a senior. Yeah. That's right.
Yeah, she'll be teaching down there. She's got a job teaching golf that starts 2 days after graduation. So
where at?
Indian Creek, which is their home course actually, but it's a nice course. They hold a
Indian Creek in Omaha.
I've been there. Really nice. Yep, so nice. She's going to be doing that, and wow. Getting off the payroll, Tony, which is kind of nice.
Get her off the payroll.
Yeah, get self-sufficient. She's getting a new apartment today. She was like out shopping for it, so things are looking up for the kids. So
that's good.
Yeah, onward and upward.
That's great. Well, congratulations, Rob. You did a great job. You do so well with your kids, and you did a good job with her, obviously, and she's well on her way. So that's awesome.
If anybody needs golf lessons, just give me a call. I just.
In fact, we know a guy in Omaha who probably does need some golf lessons.
We do. Bill
Altman. He's been on the show before with you. So.
Yeah, we did a crossover show like a while back. It was kind of fun. And I know Bill. I actually, when I was in Omaha, I went out with Bill and his family for dinner. So Natalie, Em, and I, because we met up with them, we're like, hey, let's go for dinner. Happened to be his daughter's 16th birthday, actually.
That's
on
crazy.
The exact day, the dinner. I'm like, oh wow.
I think it was Gracie's 16th, right? Probably, or Michaela's.
No, Grace.
No, it was Gracie, the younger. Yeah.
I think Michaela's going to Tennessee, so
she's 18. She's going to Tennessee.
Yeah. So that's kind of cool.
That's cool. Well, enough about family. Our listeners, we're filling them in on our friends' families now.
They don't want us to have a personal life. We've heard that before in the comment section.
Yeah, people in the comments will be saying skip to 3 minutes, 50 seconds.
Enough already. Right, enough. So today, Tony, here's what we're going to talk about. We're going to talk about the odds of being positive in the stock market. All right. So over the last few weeks, what have we been talking about? We've been talking about tariffs. We've been talking about volatility. The market's been swinging all over the place. But I do want to point out to our listeners, especially those that subscribe, you should always click and subscribe. Costs you nothing, but you get this information before, we email it out to everybody, because the show's prepared. But if you remember, Tony, a few weeks ago, I did a whole thing on missing the best days in the market.
Yep.
So the crux of it was I took a 20-year period. From the data was available from 2001 to 2021, and if you missed just the 10 best days, so what do you got in there? You get 20 years worth of trading days. So if you only missed the 10 best, your return dropped from somewhere just north of 9% all the way to down to 5%. And if you missed the 20 best days, like 20 days in a 20-year period, you dropped down to 2.5%. Well, yesterday, Tony, in the market was one of those days. The stock market had its biggest one-day gain since 2008. So
And
going,
certain indices, certain markets, or certain, I think it was the Dow, it might have been the best
it could
single
have been the
day.
best ever. The Nasdaq was up 12, and the
Yeah.
S&P was up 10. Dow was right around there, so it was a big one.
Yeah.
And it really, going into that day, the S&P 500 was down, just right around 19% year to date, and they erased 10% of that pain in one day. So it's one of those things where, and that's why we talked about it on the show, is you can't, it's not about timing the market, it's time in the market. And no
Right.
one knew that day was going to happen going in. In fact, the futures and the market opened negative, yesterday. And I remember saying to Natalie, I'm like, there is no way this market is negative again. I go, there's no way. I go, something's going to turn, and it did, and we didn't expect what happened, but wow, it just put some, it put some legs underneath it. We
Sure.
still expect, folks, choppiness for sure for the next, 60, 90 days.
Yeah, it's down a bit. It's down a bit again today, not drastically, but yeah,
Right.
I mean, from day to day, it's been volatile.
Right. It's been volatile, and it'll continue until the tariff story is put to bed, which it seems like it's making some headway. It seems like there is a lot of countries coming forward, and it seems like they're trying to make concessions or deals or whatever you would call that with each other, which is important. China seems like that's going to be the main adversary in this. It seems after yesterday, but
Yeah.
so be it. Like, you can control what you can control, and you can't control those political headwinds that come up from time to time in markets, and we've
Right.
seen this over and over again. Just things happen, and what you have to focus on is you have to focus on not panicking, like we talked about last week, the terrified. And the people that panic, think of this, Tony, and I know an advisor. I'm not gonna throw him under the bus, but he put all his clients to cash on Tuesday.
You are kidding me.
No, no. And I said to him, I said, "You're nuts." I go, "You can't do that." And he's a fiduciary. I go, "That's not in your best interest." And from his perspective, it was in the best interest. And
Oh.
I can give you every stat on planet Earth that says why that's a terrible, terrible move in your portfolio.
And
It's
yesterday the stocks proved him wrong. So the day before they had the big gain, he took them out.
right, right.
So they missed one of the 10 best days in the market.
For
Probably.
sure. Oh, for sure. For sure. Like,
Yeah.
it's going to be for sure. If you think that, once we get the data for the past 20 years, that's for sure going to be one of the 10 best days. If not, like you said, it could be the best day. But
Yeah.
and that, to me, when you do something like that and you're a fiduciary, sure. I took some phone calls. So clients are nervous. Call us if you're nervous. Call us. I have no problem talking you off the ledge.
Yeah.
And quite frankly, because we meet with people so regularly, and because we do this show, and because we send things out, I don't have too many panickers, Tony. But I had two people call me that never call me. And usually when that happens, that means we're probably in the, I can't call a bottom or anything like that, but we're probably pretty darn close to it, because when those ones come out of the woodwork, it kind of makes you say, wait a second, okay, if this person's getting kind of, I wouldn't say nervous or anything, but just needs a little bit
antsy.
a little reassurance, that tells me something, so, and our job here as your wealth manager is to protect your wealth. And protecting your wealth isn't making, emotional decisions. That's why you use us. That's why you use advisors, because you want to take your emotions out of it. Because people's emotions is what causes them stress. We've done a million shows on, the individual investor that averages 2.5% compared to the market at, 7, 8, 9%. And the reason for that is what that friend of mine did yesterday is, if the panic got to him, think of all the other people that the panic got to. You see this, you read the headlines, and I don't care if you love Trump or you hate Trump, but you have to kind of,
You have to remove the politics of it.
you have to.
It's hard,
it's
with the
definitely
tariff
hard.
situation, because it is somewhat directly correlated. But presidents come and go. The markets are always going to have volatility no matter who's in office. There's going to be
Right.
corrections, right?
For sure, for sure. And when you let the emotions get involved with you, and this is why we've been talking about it so much over the last few weeks, because I know what people are feeling. We talk to the people. They come in, I've 4 or 5 appointments every single day with clients, and this is the underlying concern, like what ifs, and what if this happens, and what if this happens. You can't control what happens. You can't control, the government policy. You can't control tariffs. But what you
Somebody could sneeze in China, and it could affect the U.S. markets tomorrow.
For sure, and yesterday they come out and delay tariffs on certain countries for 90 days. Market goes, oh wow, we love this. No one knew that was going to happen.
No one.
And no one knows what happens today. But what I do know is that over time, Tony, the ones that stay invested and stay with their plan are the winners. And I believe, Tony, you have a chart that I provided you.
Yes, I do.
Can you put that chart up?
Yep, I'll throw it up there. There you go.
So, folks, take a look at this. This is the odds of being positive. So what it shows you is that the stock market is positive 73% of the time, or really 3 out of every 4 years. And we talked about dieting the other week, so the 3 out of 4 years it's positive. If you look on the right-hand side with all the green versus the left-hand side with the red, not only is it positive, but you can see the amount of times, the worst case, the average return on the S&P versus the largest conglomerate of down years. There's so many more on the up year side, and there's some big ones. You can go down to, I got a copy here because I'm half blind, Tony. So let me just look at mine.
Sure.
But,
well, yeah, I mean, it was up, it looks like between 30 and 40% in 2019 and 2013. I mean,
right. Look at even in if you go to in that 30 to 40% range, look at all that. There's more 30 to 40% gains in the stock market than there is losses of 10% or less. So it's and that's 30%, so very rarely, and I've said it before, is very rarely do you get a market that ends up over 20%. Now we touched it, and the NASDAQ got up to 24%, right? But you can see there is literally 6 times in history that it finishes down 20%. So if you were sitting there the other day and the market was essentially down 20%, if you knew the data and you looked at this, wouldn't you kind of say to yourself, well, the odds are that it probably goes the other way. We don't know how it ends up for the year, but it doesn't end up minus 20 too often. And then all of a sudden you get a 10% up day. Now the S&P is down 9.47% currently, and so we're looking very favorable. And the point of this chart is I look at this, and if you were a gambler and you were in Vegas, I don't gamble, but let's say you were in Vegas gambling, you would take these odds all day long.
If these were the odds at a casino, the casinos wouldn't make any money.
Right. They wouldn't have all the shows, and they wouldn't have all the great rooms, and they wouldn't have the good steakhouses. They wouldn't have any of that kind of stuff. Right. So this chart is really important. And if you want this, if you're listening out there, you want this emailed to you, put under your pillow, maybe a little comfort blanket. You can definitely give us a call at 630-780-1099. Or even go on to apadvisorsgroup.com, and on there, you can request it, because it is something that when you visually see it, Tony, it should calm most people down.
Yeah. What I'm going to do,
the world is not ending, because of tariffs. We've done the tariff story in 2018. Guess what? World didn't end. When market went down, it did go down 20% in a week and a half, 2 weeks. It was back to even, a few months down the road. So these things have to work their way out, and the people that panic generally, Tony, are the ones that don't have a plan. The ones that don't know where their income's coming from. They don't know where the growth in their account's coming from. They don't know what their legacy is going to look like, because they don't have anything formulated. Like a lot of people that sold, let's face it, last week and the beginning part of this week, those are 401k people. A lot of them are retailers, and they're panicking because they don't have the information. They don't have someone like us to lean on, which is really important. And we try to get these kind of messages out to help people from, if they're stressing up here, to get down here. But you should look at your individual life and say, when do I need this money? What's my time horizon? We have people pulling money out every single month, Tony, for income and retirement, but we're not pulling it out of their stock side. We're pulling it out of a bond fund. We're pulling it out of a low volatility fund that in times like this, like I had a client the other day, like she was in a low vol bond fund. It was down like, I think 3%. The market at the time was down 20, so we're not pulling it out where it's going to hurt us. And that's the strategy. And that's just good investment management. And you have to have a plan like that. And if you do, guess what? You don't call. You don't panic. You don't you may be not feeling warm and fuzzy, like I've said. And I have investment accounts like everybody out there, guys. So I don't feel warm and fuzzy either, Tony. The Kirvan high beta fund, during times like this, it's
it takes a hit
like anybody else, right?
Yeah.
But man, if I started selling off, I'd have to really question myself, and these are the times where I would say you either stay the course, you stay patient, you make sure your investment plan's in place, or you put more money into the market. Because if you had to look down the road, if I'm looking at this chart, Tony, and I'm looking, let's take an example. 2018, market was down 10% or under. Let me find 2019. Oh, 2019, it was plus between 30 and 40%. This is what you have to look at. Yeah, 2022, it was down between 10 and 20%. 2023, it was up between 20 and 30%, followed by 2024 up another like 24%. So markets go down, folks. Like that's the difference between investing and just having money sitting in the bank. So over time, we know markets are going to average 7, 8, 9%. Depending on where you are in your time horizon, if you're retired and things like that, yours is going to be more in a balanced, but you're looking to average, 6% over time, something like that, maybe even 7 if you have a little bit, more stock in there. But you can't average that, Tony, if you're trying to make these decisions based on emotion. You have to let it ride out and look at the chart and say, wow, there's not that many down days compared to up days,
Well, that 73% number is a great one. And like you said, it's comforting. In fact, what I'm going to do, Rob, is I'm going to have this chart printed out on fabric squares and make a quilt out of it. And then I'm going to sleep under a quilt of this graph that you have.
Okay, I like that. You know what? I was just thinking, like, that's a great idea. We should send out like pillowcases.
Yeah.
Like with this is on. So when you lay your head and you're kind of like not feeling good, you see nothing but green. Maybe we put the green on one side, the red on the other.
Yeah.
But I love the quilt, Tony. I like that. That's a great idea. Maybe when you're making your quilt, send me a quilt.
Sure.
I'd like to sleep under the odds of being positive.
The odds of being positive, it does, it feels good and it looks good. And these are the facts of the markets over the years. So we do know there's going to be volatility at times. I mean, we can see it in this chart. 2002, 2008, 2022. We know those three. Those are in the recent past. Those 3 years were really down years. But look at that, like you said. 2024, 2023, 2021, 21, 23, and 24 were fantastic years. I mean, more that made up for it. So it's pretty great.
Right. And you definitely could do that, so you have to look at when a market goes down, it becomes like kind of like a coiled spring and is ready, so we will get on the other side of this. There's, a tariff war doesn't last for 10 years, Tony. Like at one point, and I would suspect in the next 90 days that there's some sort of resolution with everybody, even China included. Like we are the biggest economy. People want to trade with us. That's why it's a bit of a power move, doing something like this. I don't want to get into all the rhetoric. I just focus on, when we're investing money, we buy good companies with strong outlooks, and we're not looking, what do they look like in a month? What do they look like in 2 months? You can't invest like that. And like we talked about the Apple story last week of tariffs on their phones and things like that, right? So we don't want to be in that panic mode. But moving on, so we don't want to make the panic decisions, but you need to develop, if you're not working with us, and we have hundreds of followers, so all of them aren't, Tony,
Right.
I know that if you're not working with a firm like ours, here's what needs to be developed. And by doing this, a couple steps, what you're going to do is you're going to avoid that panic, because if you're just looking, here's my account, that's one piece of where you're trying to get to. When you're looking at retirement and you're looking at a retirement plan, you need to solve your income first. So you got to look at your income. What do I need for income? I got my Social Security. Maybe I got a pension. I need to pull this much from my savings, my assets that I've saved in my 401k or whatever, wherever you had saved those things. So you need to solve the income. Then what you have to do is go, okay, once my income is solved, this is my growth bucket. My bucket for the assets to grow, because I'm going to probably need them down the road, Tony. I may have, an unforeseen expense. I may have medical needs. I may need long-term care. So we need to have a growth section. And those growth sections generally in times like this, Tony, they're the bouncy ones. Because anything that can go up, like our core select was up 24% last year. If it can go up 24%, well, it can go down with the market. Like I think going into yesterday, it was down 15 when the market was down, close to 20. So it's actively managed, so we're able to mitigate risk a little bit better. But on the growth side, we know we're not touching that. So that shouldn't cause you any stress. That should, you got to look in your head, okay, when are we going to need it? Is that 5 years? Is that 3 years? Is that 10 years? Like when is that money actually being used? So that should be very limited stress for anybody listening, in your growth side of things. And then you have your legacy. Where are you trying to get to? We have clients that they want to leave as much as they can to the children. We have ones that want to leave zero, because they, got them through everything. They want to spend every cent, of what they have, which is, there's no right or right answer to that. You just need to have a plan involved saying, this is what we're planning on doing, right? If you solve all of those things, guess what happens? When April 1st comes and the market's down in March, their distribution still goes in your account, Tony, just like a paycheck. So it goes in the account. And then, like I said, that could be a bond fund, that could be an annuity, that could be anything that's low volatility that's paying your income. And life will go on. And I can tell you, I don't know, like I said, when it ends, but I could tell you, if I looked a year down the road, 2 years down the road, 3 years, the market's higher.
Mm-hmm.
The market's higher. This could, people have talked to recession. If this continues long, that's a possibility. But I will tell you this, the consumer price index numbers just came in for March. They were at 2.4%. That's the lowest reading since July of 2022. So prices, despite, we're talking about tariffs.
They've ticked down. Inflation ticked down a little bit.
Yeah, for sure it did. It ticked down to the lowest level since 2022. So it's going in the right direction, for people purchasing things and things like that. People are worried that tariffs are going to spike it right back up. Some items they might, Tony. I don't know if you've ever shopped on Temu. Maybe Temu is going to, put some sort of surcharge on it. I've never bought there. I have 3 daughters. They buy dresses on there for like $7. I don't know how they do it, but
I've never bought on Temu. I know it's almost 100% China.
Right. Yeah. And that's where it's all coming from. Right. So there might be something on there. Right. But like, let's say the item's $7. Okay. So now it's $9. Well, where do you get a dress for $9? Like, it's ridiculous. Like, so it's like some things are going to have definitely effect, and we're going to see those as things roll out. There's no doubt about it, but as these countries come and say, all right, we'll do no tariff, you do no tariff. You just want that even playing field, for our manufacturers and for our citizens to pay a fair price on things. That's all you're trying to do. And by doing that, inflation in theory, if once it's all fair and balanced, should be lower. But again, it will be volatile for the coming months as this thing sorts its way out. And the biggest thing we can focus on is just making sure you have that plan in place and looking at that odds of being positive for that part of your portfolio, because a whole strategy has several different parts in it. That's only one. And retirement isn't watching the 3 o'clock close. That's my job. That's why I'm gray, Tony. The retirement is about going to where, the places you wanted to go to, spending time with family, enjoying time if you have a partner, enjoying times with your partner. That's what it's all about. This is the vehicle that allows you to do that. You know, the savings that you saved all through your life and that you have here, you saved them through your life. You saved them through 2000 to 2003. Market went down 40%. You saved them in 2008 when the market was down 30+%. You saved them in 2018 when the market was down 20%. You saved them in 2022 when the market was down 20%. So guess what? When the market was down all those times, you stayed the course because you weren't thinking about it. But sometimes when you get retirement, you're like, I'm going to run out of time. I don't have time to make things back. Guess what you do? 2008, if you didn't touch your money, it obviously 2008 was rough in the beginning of 2009. All your money was back by the middle of 2010 in the biggest, the largest financial crisis we've had since the 30s. So I'm not seeing anything like that on the horizon, Tony. I'm seeing, some political back and forth, which uncertainty, hurts markets, always does. But I also see headwinds coming down the line. I see, like we saw yesterday, a tariff announcement that's pretty positive. We're going to continue to see those. We're going to see markets going like this, and it's going to keep doing that until it's settled. And then we have, a tax plan will be coming out. If it's favorable, markets react favorably, and there's all these little tailwinds that are going to happen in like every presidency throughout the 4 years. There's always headwinds too. So you kind of have to take the good with the bad. And when you look at that chart, say, okay, well, all right, maybe we're in a headwind period right now, which we'd have to say we are. And maybe that falls. Maybe that ends up falling on one of the red sides. We don't know. We don't by the end of the year. But I know, like, if it falls on the red, my odds of being positive starting to look pretty darn good going forward. And that's how you have to look at things, and you have to make sure you're working with someone like us or a firm like us for your wealth management, so we can do those things behind the scenes, and we can get rid of companies that aren't giving great forecasts or may get, adversely, hit by some of these tariffs. And we can do the job in your portfolio to make sure that it's running efficiently and that your plan stays in place. Because at the end of the day, it's all about having a plan with a purpose.
A plan with a purpose. That is what it's all about. And the way to do that is to work with somebody like yourself, a fiduciary,
right,
a financial services professional who can lay out the plan, keep the emotion out of it, look at the big picture, look at your personal situation and goals, and then figure out what's in your best interests, right?
Right. 100%. And we're working with somebody in a team of people. Let them take, that uncertainty off your table. Like people sitting out there on an island doing this themselves, they generally make bad decisions, Tony. Yep. Every statistic would tell you that, because the emotions get the better party, so work with somebody that you can bounce ideas off, that you can sit in, and they can take you from like I said, the stress here to, oh yeah, you know what? This totally makes sense. And that's kind of how you have to look at things.
Yeah. Perfect. Well, great show today. Let our listeners out there know how they can get a hold of you to set up that no charge, no obligation consultation.
Yeah, this is the perfect time to do it, Tony, because when markets are shaky like this and you're nervous, best time to sit down with somebody. So give us a call, 630-780-1099, or you can book right on our site at apadvisorsgroup.com. Either way, you'll come in, sit with me for half hour, 45 minutes, tell me your story. And we'll listen to your story and we'll see, hey, is there a way we can help this? And then we'll just go on from there. It doesn't cost you anything. So this is the time, when markets are down, to save a few bucks, Tony. It doesn't cost you anything. Come on in, sit down face to face. I think, all my clients would say that was the best decision they ever made. It's coming in, sitting down. And I would say the same thing, the relationships that we formed over the last, 15, years or so. So definitely.
Fantastic. And again, that number is 630-780-1099. And the web address is apadvisorsgroup.com. Well, Rob, great show. Listeners and viewers, thanks for tuning in. That does it for today's episode of Ready, Aim, Retire with our host, Rob Kirvan.